Hey guys, welcome back. This is Tex. Today's Monday, January 6th, 2020. I'm going to have to get used to saying that. Happy New Year to you guys. Sorry I've been away for quite a while. I was traveling between 3 different states over the past few weeks, visiting friends and family over the holidays. But at any rate, I hope you guys had a really good New Year. I had my laptop with me, took a couple trades here and there, but for the most part, just took the time to visit with family and take a break from trading and come back refreshed into the new year. Unfortunately, I think I might be coming down with a little bit of a cold right now. You might be able to hear it in my voice, so hopefully it's not too bad because I have some videos now that I'm back home I want to put out for you guys. Also, I do have a giveaway announcement that I want to post the details in a video here in the very near future, hopefully in the next week or so. So be sure and stay tuned for the details on that. So, back home now, was able to catch a couple trades today, and although I'm finishing the day green, pull this over here, you can see I'm finishing up $320. Both of the trades that I took really just didn't work out. Apple shorted this morning, and as soon as I saw that it really wasn't working out per my plan, I ended up taking it off for a very small gain, basically flat, so really nothing to speak of there. Amazon, definitely got a little bit lucky that I made as much as I did because the trade that I took didn't work out. Actually had some news that came out against my position, so I had to very quickly manage the trade. Was really just looking to get out of the position. But I was very fortunate that I was able to walk away with as much green as I did get out of it. So I'll take it, being back and everything, but definitely not the way that I wanted to trade this morning. So let's go over the Amazon trade. I think that's the more important one. When we look at Amazon's daily chart, I hid today's candle. So what you see here, this is Friday's candle. And it was a little tricky because it could have gone either way. It had this big run up. It pulled back into the 9 EMA there. It pushed up again, put in a lower high, and then pulled back. And when we look at Friday, what happened was it got sold into the close, right? So the seller stepped in when it pushed up and sold it down into the close. So it left behind this upper wick here. So I was noticing that Friday's high of day might be a significant level to pay attention to. And when we look at the 1 minute chart, here is Friday's high of day at 1886.20. So I marked that out. And nice big extended run right up into that high of day. So I was very interested in possibly opening a short here, looking for basically a tradable pullback. Because if we even go and look at the 5 minute chart, you can see that up here at Friday's high of day, we're very extended, long ways down to the 9 EMA on the 5 minute chart. So basically looking for a tradable pullback at least down into that 9 EMA on the 5 minute chart. And then maybe even more if the daily chart in fact did pan out to show or to basically prove that Friday's high of day was a very significant resistance level. Obviously, in hindsight, you can see that it really did go much higher on the day. But I'll show you how I executed the trade, how I was able to get out of the trade. But basically, what I did is as it came up into Friday's high of day, I sat tight, I watched it reject, and then on this candle here, when I saw that it was rejecting again, I went ahead and bought just one of the 1885 puts. Now, I was willing to add into this position after it confirmed because what I'm doing here is taking it into a level before it has actually confirmed. And what do I mean by that is you push up into a level that you believe is significant resistance, especially with an extended run up. It pulls back and then maybe pushes up, puts in a lower high, and then continues to sell off. So basically, you're looking for that trend change, right? The trend was long all morning, pushes up into a significant resistance level, pulls back, retraces, puts in a lower high, confirms that the new trend being down is in place, and that gives you your safer bet to go ahead and short and look for a move much lower. So I took it initially into the level here, just one contract, obviously nowhere near my maximum risk tolerance on the day, willing to add into the position if it in fact did confirm with a lower high as I've demonstrated here. Now the stop on this with the one contract, it's a very soft stop because it's such a small position size and I know how Amazon moves. I was going to give it a couple of points wiggle room. So basically where I'm getting in at that previous high of day at 1886, that would put us right up here around 1888. So that's my soft stop on Amazon. And you can see exactly why I did that because when we did in fact push over that previous high of day, we pushed right up into 1888 and then pulled back again. So as I'm watching this right here, I actually don't like it because what is it doing here? Yes, it pushed up into that key level, but it got over the key level and it basically bull flags right back into the 9 EMA on the 1 minute chart. So it doesn't look good. I mean, Amazon's very extended on the day, yes. From where it opened, let's see if I can get this from low of day, roughly up to there. That's a 27-point move, almost about a 1.5% move in a very short period of time. Okay, that's a very significant move. Usually when Amazon moves like that much, you'll get a tradable pullback. Okay, and so that was really the trade idea. And then maybe, leaving a piece on in case this Friday high of day was a very significant resistance level, as I thought it might be. And we might see even more of a pullback than just, hitting the 9 EMA on the 5-minute chart. But starting in there with very small size, just the one contract, gave me the patience to kind of sit through this, even though we got through high of day and we bull flagged into the 9 EMA. It looks good for a push higher and most likely was going to stop me out. Well, unfortunately, what happened is some news came out, and right here we got this huge squeeze, this is a huge squeeze, guys. I mean, from the bottom to the top, that's an 8-point candle right there. That is a huge, huge squeeze, right? That really only happens on news, okay? Now, some news did come out, and we got this huge 8-point squeeze up. Now, obviously, it sailed right through my stop on that one contract there at 1888. So quickly, obviously, I did not stop out of the position. Now, when this happens, and I've discussed this before, when you have volatility, especially when it comes out of nowhere with options, it will impact your premiums dramatically. Since I was holding one put and we got this 8-point squeeze higher, the value of my put just melted big time. Okay, so when that happened, I immediately had to reassess the situation because the damage has already been done. Now, if I had been holding my max position size, basically at my max risk tolerance, unfortunately, I would have had to eat this loss, okay, because it could have easily really continued to squeeze. Even though this is an 8-point candle, there's nothing to say that it can't push even more, right? You just don't know. But since I was only holding one contract with plenty of room to add, I basically took the calculated risk that you can argue is not good trading, and I would agree with that. I took the calculated risk to add to my loser basically by managing the position, just looking to get out of the position. Not at this point, not really looking to make money, just looking to get out of the position. So with options, with that volatility and this huge squeeze higher, gave me kind of the gift of a huge drop in value on those puts. So I was able to add a couple more contracts to my position for a considerably cheaper price. And now, since I have worked up to about my full position size to my max risk tolerance, now I have an absolute hard stop in place right here because that is the next resistance level from the pivot point study. Okay, and obviously that's very, very extended. So playing the odds are that it will probably have some type of a pullback after that initial knee-jerk reaction. Now, I don't know that will happen, and there is certainly the chance that it could just squeeze right through there and I'd have to eat a pretty sizable loss. But I played the odds based on the fact that Amazon was already very extended in a very short period of time. This very extended knee-jerk reaction favored the odds that it would probably have a very quick correction back down. So I had to act very quickly. I added to my position when the premiums just melted on this spike up. And as soon as we got this quick correction down on the very next candle, I immediately went green on the position and I just hit the bid to get out and just took whatever it gave me. And it ended up being $290 profit. But again, at that point in time, I shifted my trade plan from, making money to just getting out of the position. And, it's not good trading. It's not the way that I want to trade. But because I was still within my risk tolerance, being the dollar amount on the day that I was willing to risk, it was worth a shot to try to add to the position and just see if I could go ahead and get out. I would have been happy just getting out break even. But because of the volatility of this spike up here, I got such a cheap price for those puts that just the smallest correction on the next candle meant that I went green instantly. And you can see that I went green, by a decent amount there, up $290. And that was even just, hitting the bid. So with the spreads and everything, it was up even more than that. But that's what I actually realized when I sold the position. So not a good trade, really. Like I said, not a good trade at all. Managed well, stayed calm, did not panic when that happened. Fortunately, again, I wasn't up to my full position size, which I never would be, because why? I took the trade into a level before confirmation. I didn't wait for confirmation. I took a position, kind of just getting my feet wet into that level in case we did have a nice rejection off that previous high of day. I wanted to make sure that I was in the trade, but that left me room to add into the position if we in fact came up and put in a lower high, and then could have possibly looked for a much bigger move down if that's how the daily chart wanted to play out, but it didn't. And obviously Amazon had a significant move higher on the day. So I made the right call, certainly not being greedy, just immediately getting out as soon as I got that push back in my favor, not messing around with it, right? The trade clearly didn't work. I just managed the trade, managed the loss as best as possible within my risk tolerance. And with that, I'm happy to walk away green, but I would have much rather had a good trade. A good trade is everything. I would much rather have a really solid trade, executed trade, versus having a nice green day. So it is what it is. I will take it coming back into the new year. And with that said, guys, hopefully you guys are doing really well. Look forward to making some more videos for you. And as always, I really do appreciate it. Take care, and I will catch you in the next one. See ya.